Good afternoon and happy Friday. This is Dale Ellentenny with the Gustan Cho team. Here to talk to you about what we call the non-QM products, which I've alluded to and spoken about in many of my previous videos. Current new update to this program, some great rollouts here recently. I want to start with, if you're a buyer out there and you've got money in the bank but you can't show, or you don't show much income on your taxes, maybe you're self-employed, maybe you're W-2'd but you have another source of earnings, dare I say maybe you're unemployed. Yes, I said that. Okay, here's some things that I can tell you that we can do right now. Obviously you have to have 20% down and you have to have a minimum FICO score of 640. You can do, you do have to have some active trade lines on credit. You could have 2 for 12 months or 1 for 24. What do I mean by that? You could have 2 credit cards regardless of the size of credit line for 12 months, or you could have 1 credit card for 24 months. Yes, 2 for 12, 1 for 24. Now, if you have a 640 FICO score and you want to put 20% down on a house that's going to cost you $2,000 a month, you have to have 18 months in reserves, which is $36,000. If you have a 720 FICO score, or you have to have 6 months reserves, which would be $12,000. So the trade-off on this program is you're not verifying income, but you are verifying assets. If you've been in this business for a long time, there used to be a program many years ago called the NIVA, No Income Verified Assets. That's exactly what this program is. So once again, let me repeat. If you're a borrower out there struggling to qualify for a home because you don't income qualify, but you do have 20% to put down and you do have reserves, this may be a great program for you. Keep in mind if you have very thin credit, maybe you only have 1 credit card for 12 months, meaning you opened it 12 months ago and it's the only thing reporting on your credit, but you do have a rental history, we can get a verification of rent and add it onto your credit report to satisfy the 2 trade lines for 12 months requirement. So in addition, on that same program, if you can believe it, if you're 1 day out of bankruptcy, Chapter 7, or if you're at least over a year on foreclosure, they will consider, let me stress this, they will consider doing it, but you have to have really strong reserves and understand why they want that. You're a recent credit risk, you've got a recent event, I should say, and you're trying to get back into a home. So the strong reserves is an excellent compensating factor given the recent credit circumstances. So just a quick recap, and also for reserves, on the subject of reserves, if you have 401k, if you have an IRA, if you have stocks, bonds, anything along those lines, we can use 100% to meet the reserve requirement. So if you need to have $36,000 in my previous example in reserves, and you have $40,000 in your 401k, we're not going to take 70% and say that's not enough. We're going to use 100% or the $40,000 to satisfy the reserve requirement. If you feel like you're somebody who's in this position, you've worked hard and you've utilized what the IRS allows you to do on your tax returns, but it hurts you when it comes to qualifying for a mortgage, this may be a good fit for you. If you have any questions, give me a call. My name is Dale. My phone number is 630-479-2719. Feel free to call. Feel free to like, share on Instagram, Facebook, and look forward to hearing from you. Thanks and have a great day.